what's up everybody? It is Tuesday, December 29th. 2 more days left in the year. So, kind of an uneventful day. You can't expect every single day that there's going to be some meaningful development. And as a matter of fact, it's kind of like self-sabotage to think that way. You got to like elongate time. You got to stretch it out. You got to think big picture, macro, like you're looking at stuff from 30,000 feet. And one of the best ways to do that is, rather than think about the markets and price, I did a video on that. Like a lot of people focus on price and they believe that price always conveys information, important information, and really that's just a fallacy. That's not true. I mean, just, consider the market that we could see movements, all over the place in percentage terms, and then you put some distance in between those movements and you look back and you say, wow, that was a great opportunity, and that, you miss that, or you get spooked by that because you're only thinking in terms of price. Whereas the way to think about it really is, what is the driver of price? And that is, that's basic conditions. And what is the driver of basic conditions? 95, 99% of the time, that is policy. I mean, outside of policy, you could have some natural event, and that would be a driver of basic conditions. But those things are very, very rare. So it's really policy. So you have to think in terms of policy, and when you keep that in mind, it's much easier to elongate time. Like we have cycles. We have election cycles. I mean, every 2 years, there's a midterm election for Congress. Every 4 years, we have a presidential election. I mean, in between those periods, not a lot happens. I mean, you may have some minor things that happen, but, the main policy directives, the main policy shifts occur in those 2 to 4 year periods. And once you understand that, it's like physics, man. Like an object in motion will remain in motion, right? That's one of the basic laws of physics, laws of thermodynamics. An object in motion will remain in motion. An object at rest will remain at rest. I mean, policy puts these trends in motion, and they tend to stay that way until the policy shifts. So you really have to think more in terms of, okay, I'm here right now. I need to look out to the midterm elections of 2022, or I need to look out to the next presidential election in 2024. I mean, we got a new guy coming in now. He's going to formulate policy. It's, right from the get-go, I wouldn't anticipate any changes. As a matter of fact, I would say that even given his fiscal conservative bent of the past, like we've seen, and I've talked about how Biden really is a fiscal conservative at heart, like he's coming in here now on, it's not a mandate, but in a situation where millions of people in this country are crying out for help. I don't see him turning to fiscal consolidation right now. So these trends are going to remain in place, man. We're talking about, equities concentrated in particular sectors of the economy, as I've been talking about, materials, cyclicals, the banks, this sort of thing, commodities, dollar going down. All right. I mean, right there, you got to just think about the fiscal deficit and the trade deficit. I mean, the last time you really saw a bull market in the dollar, and it was not very long term, but it did last from like 1997-ish to what I believe was like 2003, something like that, was when, or 2001, maybe 2002, I got to go back and look, but that was when we had the Clinton budget surpluses. And I believe we even may have flipped briefly into a trade surplus. So, you know, that was a period of time where policy supported a bullish dollar trend. We don't have that right now. And we're not going to have that until there's some kind of fundamental shift in the fiscal situation, in the trade situation. So, I mean, this is the way you got to think. I mean, if you're thinking, you know, oversold, overbought, I mean, you are so limiting yourself. You are so limiting yourself. You really have to break away. And by the way, that's how the big money is made. And I'm not just talking about, you know, trading markets. I mean, if you're talking about building a business, if you're talking about investing on a large scale, maybe in real estate or something like that, I mean, you need to see out years in the future. I mean, you don't build a business in a couple of months and expect it to go from nothing into this boom. I mean, if you look at some of these entrepreneurs now and these companies that have gone public, I mean, these companies have been in the works for years, all right? And maybe for years not making any money, and maybe still not making any money with the IPOs and recently having gone public. But I mean, that's, you know, venture capitalists, entrepreneurs, I mean, that's the way they're looking at this. They're looking at this long term. They're looking at this at their market potential long term. You got to look at this the same way. If you don't, it's like, you know, you're chipping here, you're chopping there, you're making some, you're losing some. Probably on balance, you're going to be a net loser. I mean, you got to retrain the way you see everything. And the best way to do that is to focus on policy, not spend a lot of time looking at market fluctuations and price. Price is a very misleading indicator. It's not even an indicator. It's just a very misleading thing to focus on. You got to be focused on basic conditions, and that's driven by policy. So yeah, that's, you know, I don't see any change really, at least for the next year. We may have the beginnings of some kind of change as we go towards 2022, but you know, it's all tied up in the political cycle, and these things are not just predictable. I mean, they tell us what they're going to do. It's not like it comes out of the blue. I mean, Congress, the president, they say what their plans are, and then, you know, it's debated and it's voted on, and then it's implemented in some form or another, and then we know what's going to happen. But for now, it is what it is. We know what the conditions are, and they're not about to change anytime soon. All right, folks, don't forget you got a couple more days to sign up to my report at the current rate of $395. January 1st, it goes up to $500 a month. I just got an email from a guy today saying, Mike, at $500, your report is well worth it. And he's right. I mean, ultimately, it's going to be, my target for this report, because I'm the only one who does this, is $1,250 a month. So, get it now. Go to my website, pitbulleconomics.com. Sign up now for a 30-day free trial of MMT Trader. Remember, I'm the only one who has an applied approach to MMT. I take the concepts and understandings of MMT and I use them to invest. And I help people with their mental game and all that important stuff. See everyone tomorrow. Bye-bye.